Right then, good morning everyone as we head into European trade on Thursday the 23rd of May. We'll have a flick across the news, see what's up, what's down after Nvidia earnings last night. Seemingly like the whole global economy was resting on Nvidia's shoulders yesterday, and it didn't manage to blow up the world. So positivity off the back of that, upgrading quarterly revenue forecasts. Obviously investors look at that relatively positively, beats estimates, therefore positive, and I think it's green light for that to continue heading higher, and then probably the broader equity space along with it. I mean, if they had a missed estimates, I'm dread to think what would have happened to the stock index, but anyways, it seems like a good chunk of the global economy was resting on Nvidia's shoulders yesterday, but it pulled through, so we don't need to think about what would have happened on the other side, and we're clear that for another few months from Nvidia. Kind of overshadowed the minutes last night, relatively hawkish minutes from the Fed overnight, suggesting that a few of the market or a few of the participants in the Fed, a few of the voting members were willing to hike rates if necessary, if inflation did not come down. So that's kind of something that we haven't really heard too much of before. Certain voting members willing to hike interest rates if necessary. I mean, it's something I was saying a few months ago when inflation was still rising. Didn't really rise in April though, so that's a bit of a positive thing. Let's see how that pans out when we get May's reading at the beginning of June. Whether we actually get interest rate cuts this year or not is a different question. I mean, CEOs, or the CEO of Goldman Sachs, I was reading yesterday, saying he doesn't think we'll actually get any cuts this year. But anyways, I kind of shared that opinion. I do share that opinion. Obviously, it depends on how inflation pans out the next month or two. But a couple of speeches out earlier on in the week also suggesting that we do need a few months of inflation pushing lower before they feel comfortable about cutting interest rates. So no chance of that happening just yet. No chance of cuts anywhere in the near term. We're probably looking at November, December, because in order for us to get a few months of inflation coming in below expectations and below the previous month and resume that downtrend, obviously we need a few months of time. New Zealand dollar holds ground as RBNZ out-hawks Fed. I mean, New Zealand Central Bank, the RBNZ pondered hiking interest rates at their meeting yesterday, and also then suggested that they are upgrading forecasts for the terminal rate and that they do not see cuts through to mid-2025 or possibly even late 2025. So that's a bit of a change up from what they have been saying. I mean, not a change up, kind of reiteration that we're not going to get these cuts, but markets had priced in some cuts by year end from the RBNZ, and they're kind of sticking to the script. We're not going to get them till 2025. Sounds like we're back in 2022 again, but. So Kiwi dollar's probably likely to remain somewhat positive off the back of that, and also if stocks continue to trend higher, the Kiwi dollar is a good long. You would have to imagine Asia stocks ease as central banks play game on patience. That's not really something I don't think the ECB and the Bank of England can do, but the rest of the central banks, certainly your RBA, your RBNZ and the Fed kind of have to stick to that script. May not even hike interest rates by year end. Stocks were lower after the minutes yesterday, but they kind of have bounced back with Nvidia. Asian shares down pretty much across the board, apart from the Nikkei. So not massive clear direction across the board. So we kind of have to be somewhat careful with that. But positive Nvidia earnings yesterday is likely to keep stocks heading higher, specifically the Nasdaq with that 10% or 9% weighting for Nvidia in the stock index. Now, I'm not a person that really trades individual stocks. I'm not going to go and place a trade on Nvidia, but due to the 9% weighting in the Nasdaq is something I will trade. So got to keep an eye on it. Even if you've no intention of trading it. Bond yields pretty much lower across the board. US yields have bounced back. The 2-year yield was kind of trying to push higher last time I was looking at it about half an hour ago. So if they continue to push higher, it should continue to be positive for the US dollar, but they are lower today, therefore negative for the US dollar, but relatively mixed across the board in currency land. Kiwi dollars up across the board, but apart from that, you've got none of these are red across the board, which just shows you that there is no clear direction across FX in the Asian session overnight. Brings us on to the calendar today. We spoke about the minutes from yesterday. Oil inventories, a bit of a build on oil inventories yesterday, so should in theory be negative for the price of oil. But I was looking at it at 3:30 yesterday, and the and oil started pushing higher off the back of it. So, but anyways, oil's just been choppy for a while now. PMIs across the board today. You've got Australian PMIs this morning, pretty much in line with consensus, slightly negative in terms of the services. Japanese PMIs this morning. You got French PMIs out in 10 minutes from now. You got German PMIs, you got European PMIs. Then you look at the UK, then you look to the US a little bit later on. Now, economic data in the US has surprised to the downside quite a number of prints over the last month or so. So something for us to keep an eye on at 2:15 today. Well, on the flip side, European data has surprised to the upside over the last few months. So is that a case for some euro dollar longs? I mean, judging by how it's gone over the last month, I don't think it'd be a bad shout. But as we were talking about yesterday, I do think the US dollar turns around and pushes back higher again at some point. Once the ECB, the Bank of England, start to cut interest rates, if inflation decides to fall off a cliff in Australia and New Zealand, which it isn't showing signs of now, but maybe it does, maybe it doesn't. I do think interest rates in the US are going to be higher for longer, certainly than the ECB and the Bank of England. So I do think shorts on euro dollar, shorts on cable are going to come back into play, but due to the fact that it's pretty oversubscribed on dollar longs at this point in time, a bit of a pullback against that is not a bad thing. Let's hope some people that are long some dollars can close their positions, and then that can give us a fresh wave of upside across the US dollar. We probably need some sort of driver for it, whether it's the interest rates being cut in Europe or whether it's economic data starts to accelerate again or any of that sort of stuff. Let's see how that pans out. But we'll await that, and obviously we will update as and when we get to it. But PMIs, I'm not going to break down every single release today, but let's keep an eye on these. Normally these aren't as volatile as some other things, like when you're looking at, say, CPI or NFP or labour market figures, any of that sort of stuff. They can be quite volatile and sometimes difficult to trade, but if you can look at these French PMIs and they come in either all negative or all strong, that can kind of set the tone sometimes for the rest of these. For the German, the German ones to filter through. And by the time you get the French ones and then you get the German ones, you should kind of know where the European ones are going to end up, and kind of get into a trade without the volatility and hope to ride a bit of a move. So let's see how these French PMIs pan out. Well, the hope is for them to come out possibly all strong, and then probably hope for some weak figures out of the US a little bit later on. That'll probably give us the best opportunity today, and then you can just be long euro dollars off the back of that. But we'll keep an eye on that as we get on through the rest of the day. You can see a bit of upside this week so far over the course of across your Aussie. Kiwi's just been a bit all over the place, but Aussie, Euro, Sterling's just sideways. Bit of US dollar strength this week, and also a bit of Sterling strength, so not much to see there. But Aussie weakness, Euro weakness, which is then US dollar strength. Dollar Swiss trending higher, dollar yen trending higher, dollar CAD trending higher over the course of this week. Which kind of goes against where it's been headed in recent weeks, but that goes in line with these bond yields pushing higher. The 2-year yield continues to push higher. The 10-year yield kind of chopping around up here, but the 2-year yield pushing higher. If yields continue to push higher, that should continue to be positive for the US dollar. It's supposed to be negative for stocks, but you can see the way stocks have moved over the course of the last kind of 12 hours post minutes, kind of shot lower on the minutes and then kind of ripped higher off the back of Nvidia, certainly across the S&P and across the Nasdaq. So something for us to keep an eye on over the course of today, is I'm not so sure you really want to touch stocks in today's session, to be honest, but maybe some shorts in the US dollar if the data plays out over the course of today. But been a relatively tricky week, not that much for us to go off on the economic calendar. So on weeks like this, if you can get out without losing that much money, it's probably a good thing. But let's see how the data pans out today. Maybe that can give us some tradable opportunities.